Welcome to the Impact Sessions. Today, I'm delighted to have with me Julie Waits. She's the Managing Director of the Franchise Company, based in the north of England, working internationally. And Julie's an expert in all things franchising, as the name would suggest. And we're going to look at, is my business ready to franchise? So welcome to the Impact Sessions, Julie.
Thank you. Lovely to be here.
It is indeed good to work with you. We've, as my children would say, we've known each other for about 100 years, I think they would say. Recently started working together with me getting involved in the franchise sector and working with some mutual clients. And it's a really interesting sort of business model to me. I've not really exposed my business to that sector before. So I thought I'd have you in and try and explore some questions that some of our viewers and listeners might be interested in, whether their business would be franchisable and what are the pitfalls and ups and downs of that, if that's okay.
Yeah, great. Super. Look forward to it.
Excellent. Okay. Well, you run a long-established, very successful business. It's all about kind of franchise development, support and training. How did you get into that particular sector and specialise in such a defined area?
I went to work for a company called the Print Group.
All right.
And they were based in Darlington, and they were one of the earlier franchisors in the UK and one of the founder members of the British Franchise Association. I was a very lowly regional manager, which basically meant I drove anywhere between Aberdeen and Bournemouth from 9 o'clock on a Monday morning to 5 o'clock on a Friday afternoon. And my role was to recruit, train, support new franchisees within their network, specifically with a company called Poppies, which was one of their subsidiary companies, basically. And I was with them for about 5 years, during which time they floated on the alternative investment market, valued about $10.5 million in the mid-80s. So it was very much a period of rapid growth for them in a purple patch. I learned a huge amount about franchising in terms of what's really good about it and the good things and how to do it really well. And I learned a huge amount about franchising in terms of what can go wrong and things not to do and things that they did that potentially they would look back and regret doing, basically. And then I went and worked in the telecom sector with a company that was at the time also based in Darlington, and they had 3 retail outlets in the northeast and wanted to franchise, expand, grow their business.
Were they not a franchise at that time when you joined them then, Julie?
No, there were 3 individual outlets run by 3 directors who subsequently set up the company, and I went in and developed the franchise model from scratch without anything at all and helped them to grow the business. And over the next 5.5, 6 years, we grew the business from 3 to 41. And I ended up being a main board director and shareholder within the business. And then I decided to take the advice that I'd given to lots of other people, which was to start a business myself, because that's my background in terms of my family have ran businesses for many years.
Yeah.
And the thing that I knew how to do was to set up businesses and operate them on a franchise basis.
Right.
So that was where the original idea and concept of the franchise company came in. The idea originally was to work predominantly with northern-based businesses because there were similar consultancies in Birmingham and London, but nothing in the north. So we set up initially to work with northern-based businesses, help them expand and grow across the UK. And then we started working with companies in other areas of the UK. And then the internet came around and the whole thing just exploded. And
the world is your oyster then, isn't it?
Yeah,
really?
that's right, very much so. So we now work on kind of virtually a worldwide basis, basically.
Excellent. Okay. Well, it's a massive sector. My first exposure to that really on a working basis has been the last sort of 12 to 15 months. And quite surprising, there's quite a few well-known brands that you might not even know franchise businesses. We were at an exhibition recently, and people like Vodafone and Hilton Hotels and people like that. Do you want to share a few brands with us that people might not realise operate on a franchise model? Obviously not without breaching any confidentialities, but the brands out there that the vast majority of the public might think, no idea, didn't know that was there.
Yeah, certainly. I mean, I think most people know that McDonald's is a franchise, that Body Shop is a franchise. And a lot of franchising is associated with food. But basically it can be used across a very wide variety of sectors. So one of the potentially more interesting projects that I did was with an organisation called Ramsden's, and they're a firm of pawnbrokers and providers of financial services. They have recently floated on the stock market, and I think their shares are now worth around about £2 a share and got a significant valuation. And again, that business was set up originally in Stockton-on-Tees, and the guy who started it had 3 company-owned outlets, wanted to expand and grow and develop, and I worked with him to develop the franchise model, and they are very successful within their sector and a very successful organisation, and have got there through franchising, basically.
So whose idea was it then? Did he have a desire to get into franchising, or was it a desire to expand the business and you advised that franchising was the right route for him then?
He'd got to a stage of his business development where he knew there was an opportunity to grow, but he didn't want to continue to grow opening company-owned outlets. From the point of view of the capital that was required, but secondly, from the point of view of the actual commitment of the individual working within the organisations. And that's a situation that happens with quite a lot of companies. They know they've got something that really works, and they know that there's a market opportunity. They believe that they've got the opportunity to scale, and they may need to do it reasonably quickly. And either they don't have the capital, or they don't have the desire from a management point of view to start to employ many managers operating the businesses in other geographical areas. So that's really 2 prime motivators why people do look at franchising to grow their brand and business, but not have to either have the financial capacity, take the financial risk, or employ people in arm's length, geographically remote locations.
Okay. It's also a bit of a safer option for those potentially looking to start a business, isn't it? Because they've got the, I guess, central services, they've got a brand there, they've got some level of additional support. So rather than set something up from scratch for themselves, they can still have the entrepreneurial spirit, but I guess with a bit more of a wraparound support mechanism. So is that something that is attractive to a franchisor as well, the person who's looking to, expand their business? Are they looking for entrepreneurs, or are they looking for operators? What's the sort of general?
They're not looking for entrepreneurs in the sense of Richard Branson's or Alan Sugar's. They're looking for people with entrepreneurial skills who can use their entrepreneurial skills but work within the remits and the requirements of the franchise model. So entrepreneurs with a little e rather than a capital E, basically. And certainly from the individual's point of view who become franchisees, franchising is a much safer way and potentially easier way of getting into a business and starting and establishing a business than doing something on your own where you've got to think of everything, create everything, the brand, the website, the systems, etc. And the stats massively support that in terms of failure rate in starting a business from scratch is about 80% in the first 3 years. And the failure rate in franchising has historically been around about 5%, but it's dropped recently to around about 3%. So it's really a much easier, safer way to get into business. Both
parties, I guess.
Yeah. If you're right, it's got to be right for the franchisor's got to be right for the franchisee and vice versa. So if it's right, it's a great way to potentially expand a business, and it's a great way potentially to get into a business.
Okay. When we were at this big exhibition at the NEC in Birmingham, I was amazed at the variety of business types that were there. You said rightly there's a lot of food businesses there, there's a lot of leisure businesses, that kind of thing. What would you say are the main characteristics of a business that has genuine franchising potential? Is it sector or is it something else?
Not sector, because again, in terms of the sectors that franchising covers, it is very varied, and the example of Ramsden's was just to really illustrate that. It crosses across education, it crosses against personal services, hairdressing, beauty, gardening services, cleaning services, you name it, franchising is generally in there offering some form of opportunity. Fundamentally, franchising is all about a proven, successful business format. So if you're a business owner and you've got a business that works, it's successful, it's got the potential to grow and expand into other geographical areas by basically replicating the same model that you've got in one or more existing areas on a company-owned basis, then potentially franchising could be the way to do it. Running alongside that, there are also expected factors such as a strong brand, strong corporate identity, registered trademarks, and good systems and procedures internally to enable the business to grow and develop. So you've got to have robust internal systems and mechanisms to enable you to then recruit, train and support other individuals who become your franchisees to replicate that business.
Okay, so you can't basically look to be successful in franchising if your business model is haphazard or doesn't have a good structure, because all you're doing then is replicating a structure that's probably going to set up to fail, I guess.
Yeah, absolutely, definitely. If you've got some fundamental areas of weakness within the business and you know about those areas of weakness, they have got to be addressed. Otherwise, all you're doing is replicating a model that you know has inherent weaknesses built into it. And whilst franchisees are very aware and open to developing business models and being part of that development really as market progression, they very much become your customers in terms of you're providing generally management support services to them, and they're providing income to you in terms of fees, and they certainly do expect the systems and the models that you provide them with to be well developed and robust and proven.
I guess that's what they're buying, aren't they, at the start when it comes to your franchise fee and your monthly management fee. There's a mutual benefit to both to have things very clear from the outset of what you get, what you don't get, how it works, how it doesn't work. I'm assuming you've got stories of, and again without breaching any confidentialities, of businesses who were aspiring to franchise and for whatever reason just didn't work out potentially.
Yes, I mean, from our point of view, in terms of organisations that we work with, sometimes some of the companies go through the initial stages of looking at franchising as a strategic option and then decide when they become more informed and more aware of the process and realistically the commitment that maybe it isn't the right way for them to grow and expand the business. But outside of that, and hopefully not with the organisations and companies that we've worked with, we've seen many examples of companies that try it, do a bit, don't do it very well, and end up with a very small network of unsuccessful and unhappy franchisees, and that's exactly not the position that you want to end up in.
Okay, I mean, it makes sense, doesn't it, really? You if you're looking to franchise, you're not looking to franchise to one or two areas. It's usually part of a bigger expansion plan and some bigger ambitions. What kind of organisations have you worked with, and in terms of scale, what's the biggest number of outlets that they've managed to get franchise-wise?
Within the UK, networks up to 250.
Wow.
Yeah, so we've one organisation, a company called Avenue. We worked with them and they grew from 15 to 120 in a 4-5 year period. And then another organisation, a company called First Class Learning, who run maths and English tuition centres. We worked with them and they grew from about 10 to about 250 in, again, 5-6 year period.
You couldn't do that any other way, though, could you, really?
No.
You'd look at that, that's just absolutely impossible to deliver on an owned management growth plan. It just wouldn't exist, would it?
No, you couldn't do that, and you couldn't get the levels of customer care, the levels of performance in terms of the business itself, because it's about the drive, the determination, the commitment of the individual franchisees, And that's very much what they bring to the offer, in addition to, the capital that they've got to invest in the business.
You'd also lose a whole lot of consistency, wouldn't you, if you grew that quickly in a standard business model that wasn't franchise driven? You would be all over the place with everything from brand and delivery and service, the whole lot really. So it's probably the only way to get to those numbers at that speed, isn't it?
Yeah.
Okay. So if I have a business, or one of the listeners or viewers have a business that they think, you know what, I might like to franchise this, I might think about that as an option, what are the steps I would need to take to give myself the best chance of success?
If we assume for the purpose of the discussion that the business itself is proven and it's successful, then it is a stage process that companies should go through. And the first stage is to actually look at the core business and redevelop it in terms of how it will operate on a franchise basis. So again, it's really carrying out some in-depth business review work and, in effect, taking the business apart and putting it back together in relation to the franchise model. So that looks at all aspects in terms of operational performance, financial performance, looking at the marketing aspects, looking at things like protecting the brand and the intellectual property, and then looking at how it should be wrapped up initially from a legal perspective. And out of all that, the financial model is the driver, in so much that if everything else stacks up and makes sense but the financial model doesn't, then obviously the business can't go ahead to franchise, because there has to be sufficient income, return, profit in it for both the company to take their ongoing income as a management fee or sale of products, and likewise for the individuals that are going to invest to get a return on their capital and enable them to generate a level of income that's in line with their personal requirements and above, and potentially the ability to generate a capital asset themselves. So assuming that all those things stack up and make sense, and there's a big tick in that box and it aligns with the strategic objectives of the organisation, then the second stage would be to develop the franchise documentation, which is required. And that's again based upon the first piece of work in terms of the model development, but it fundamentally looks at things like the franchise prospectus, the franchise agreement, the franchise operations manual, the training that's going to be given to the franchisees, and again the financial model and the detail of that financial model. And then from a marketing perspective, we need a marketing campaign, which is basically how the company is going to engage with its potential franchisees, recruit, train and support them. And once all of that work and methodology and systems have been in place, then the company will move to the next stage of development, which is to recruit generally a small group of what we call pilot franchisees. Yeah. And they are in effect for want of a better term, the pioneers, the innovators or the guinea pigs that the company will work with to take them through the process of establishing the business.
I guess they're ironing out anything at that stage early in terms of expanding it to a wider audience, but that's probably a test bed for both sides, is it?
Yeah, it's testing all the systems. So it's about looking at, what they need to do to train those people, what they need to do to work with them to support them and get them up and running and get them off to a really, really good start, and demonstrating that they can take someone from outside of the business who probably has no prior knowledge of the business and potentially the sector and potentially has no previous experience in that business or sector, and train them to become a successful business owner within that sector and within their brand.
Okay. It sounds fairly straightforward but complex in equal measure, I guess, because there's a lot of documentation and paperwork that has to stack up to examination further down the line and cover both parties. If I was considering franchising as an option for a business, what sort of timescale would I expect to incur from, okay, I've made a positive decision to do this, to actually getting launched with a pilot of, a handful of 2 or 3 or slightly more franchisees in an area within the UK as an example? What's the timescale expected on that?
The stages that we've just discussed, the first stage, which is the franchise model review, normally in development, normally takes around 2 to 3 months. Mm-hmm. The second stage, in terms of the documentation, normally takes around 2 to 3 months. And then the timeline for actually recruiting the pilot franchisees is varied subject to the profile of the individuals, but also the type of business that it is. So if it's a van-based operation, you can have potentially franchisees who are up and running within a couple of months. If it's retail premises, then it will take generally longer, because in addition to recruiting the right people, you've then got to find the right premises for them. So that can take 3 months to recruit the individual, but then 6 months to find the premises, basically.
Okay.
So generally, within, let's say, a year, we would expect that a company would have gone through the development process and have engaged with and recruited their pilot franchisees, subject to the fact that the pilot franchisees may still be looking for premises if premises are required.
Okay. So it's not an instant win, but I guess that's in running any business. You're investing in a process for longer term success. So any shortcuts are probably going to come back and bite you further down the line. So doing it properly and using an organisation like the franchise company's got added benefits to getting them along that journey with holding the hand throughout every stage. Would that be the sales pitch for you then, Julie?
Well, it's not an instant win, and it certainly does take time to do the development work properly, because ultimately the devil's in the detail. So it is about getting the detail right in terms of the systems and the procedures, but it's also about looking at the model in terms of its longevity. So it's reasonably easy for anyone with a bit of information knowledge about franchising to, for want of a better term, cobble together a model that looks good, has a nice brochure, and potentially can be used to attract individuals and sell them a few franchises. But really, the methodology that we use and the kind of advice that we would always give is, don't even think about that stage. Think about building in the real added commercial values, so that when the franchise agreement is up for renewal at the end of its first term, which could be 5 years, there are real reasons for the franchisees to want to renew. And then you have got a business model that has potentially got longevity. And if you look at the established and successful franchise networks, there are now organisations out there that have got franchisees that have been with them for 20 and 30 years. And those people can be paying quite significant management fees on an ongoing basis to the central company as franchisor. And they will only do that if they're getting real commercial benefits back from that.
Yeah, so no shortcuts, because that's going to come back and be a potential problem further down the line.
Yeah, the scaling comes after you've gone through that development process. So if you assume that the first year is going to be getting you through the development and recruiting the pilots have to be then up and running and trading themselves for 6 to 12 months. So, and then after that, then you can really start to look to scale, because then you've got a model that works and that there's appetite for the model in terms of the franchisees, and that's when the scaling can really start.
Okay, that brings me on to a question really. It strikes me as a very competitive market for franchise businesses trying to attract franchisees. There's lots of glossy marketing and video and brochures and exhibitions and that kind of thing. I've got a question about kind of the correlation between the cost of a franchise and the potential success rate. So is there anything to say that buying and investing in a more expensive franchise gives you a better chance of success? Does that work, or is that a rule of thumb that you could advise on potentially?
The return is really related to the investment that you make. So if you're investing a higher level of capital, then you should get a higher level of financial return from that, basically. In terms of the success rates will vary between networks. So if you're looking to invest 10,000 or 100,000 or $1 million, you've still got to do your due diligence to make sure that the individual franchise network that you're looking to potentially join has a good track record of success. And a measure of that is actually looking at the potential sources of finance. So the banks all have specialist franchise units, and their remit is to lend money to franchisees, and they will only want to lend money to franchisees of well-developed and successful franchisors that they've had good experiences of working with.
So if you're approaching a bank, a franchise specialist at a bank, and they're putting up a few barriers, that should be an alarm call for you in terms of why they're not looking to support that particular franchise.
Yeah, and my advice is always to a potential franchisee, even if you don't need to borrow any money, go and put a business plan together and ask the bank to lend you some. Because if the bank won't lend you the money, that's a good indication that they know something that you don't know. Or alternatively, it might be that you've got some personal problems in terms of your, credit rating, etc. Yeah. But if you're good yourself and they won't lend you the money for that particular franchise, then that's a good strong indication that there are some issues within that business.
I guess flipping on its head as well, a franchisor is only going to be as good as the franchisees that they attract. So there's due diligence on their part to find people with the right fit and the right attitude and who are prepared to put the hours in. It's not an easy win, is it, buying a franchise? It's not, it's a shortcut, it's going to be easy. You still have to treat it like you would treat any normal business, putting the hours in, the work ethic, etc., etc.
Yes, very much so. The franchise can give you the model. The franchise can give you the opportunity to success. Franchise can give you the training and support to improve the chances of success, but ultimately it's down to you as the business owner to actually implement that model and put the hard work and the time and the commitment and effort that's required to build that business in the local area.
Okay. If I was looking to franchise a business, how do I know what to charge for a territory? Because it's a very territory-driven model, isn't it? You buy a postcode or a region or whatever it might be. How do you know what to charge for that? That must be a bit of a minefield, surely.
Well, it's really all about the initial analysis and development work that fundamentally you've got to look at what package of training and support your franchisees are going to need. And the way that we do it is we have a standard franchise package that all franchisees buy, and there is generally a standard single cost for that, and that really covers all of the items that they're going to get from the franchisor in terms of any collateral, any equipment, any marketing support, and it also covers the franchisor's costs of recruiting, training and supporting them. In addition to that, there may be a license fee element. So the value of the license fee is to reflect the value of the intellectual property and the brand, and that could also reflect the size of the franchise area. But the whole area of franchise territories and analysis of franchise territories is another area of potential discussion, and it is very much all about getting that right so that you don't grant very large areas to franchisees who will not develop the area to its full potential. And part of that is sometimes matching individuals to areas. So you try not to put small fish into large seas, basically, and vice versa. So there's very much techniques involved in doing that.
You mentioned there it's a bit of a discussion point. I wouldn't mind picking up on that very briefly. In these days of data analysis and mapping, etc., I'm assuming there are some tools out there that look at, I guess, demographic of customers, footprint of potential sort of markets, etc. Are those things being used more in the franchise industry now for assessing, like you say, area capacity or customer penetration options, that kind of thing?
They are very much so, and there's a couple of companies that we work with that do that on a very much a specialist basis. And it goes back fundamentally to understanding the model, understanding what the offer is, and potentially having the data initially to put into the system so that you can identify who your core customers are currently and then use that data to project who they are, where they are, how many of them are in any given area to start to build territories. The other big thing around territories is whether the territories are exclusive or non-exclusive. And again, there are reasons to grant exclusive territories and there are reasons not to grant exclusive territories, subject to the type of business that you're operating in and sometimes subject to the type of clients that you're working with as well.
I've worked in non-franchise businesses where there have been territories involved, and the whole area of exclusivity or otherwise can often be a particular minefield, particularly if you're working with sales teams who say, my area is this particular postcode or this particular county, but they follow a customer or a customer follows them from a neighbouring territory, and can be an absolute disaster, I guess. But so it's about getting that right from the outset as well, isn't it?
It's about getting it right from the outset, and you can't stop customers choosing who they want to work with. That's part of the customer's freedom of choice, basically.
Yeah.
But it's also about communicating, for want of a better term, the rules very effectively during the recruitment process. So the whole idea of having a structured recruitment process with potential franchisees is to only bring in the right type of people into the business, and to make sure that the right people that you do bring in are fully informed, so that they can make an informed decision about whether it's the right business opportunity for them. And if it is, they understand what the rules are before they join.
It's also about being respectful of those rules, isn't it? And not looking for mavericks who are, I guess, going to break the model and upset. They don't care if they upset the people in the neighbouring territories. They're not going to be the right fit for that organisation, are they?
No, that's right. The ultimate idea is that even though you've got the franchise agreement, which is the legal document that regulates the relationship, you sign the agreement and put it in the drawer, basically, and then the network works together in some degree mutual benefit, if not mutual harmony, but hopefully mutual benefit. And there's interaction between the franchisees and the business, and the network grows, and it's to everyone's benefit, basically.
Okay. One final question. It's really about inspiring anyone listening or watching who might be considering a route of franchising to support their business expansion ambitions. What would be the one piece of advice, the one golden bullet you would say that they absolutely have to do to give them the best chance of success? What's the absolute number one rule? Preparation,
complete preparation, and know before you even start to talk to a potential franchisee what your offer is, to have the answers to all of the questions that anyone could ask you, and not just have the answers in a flippant way, to have the answers in a really well thought through, developed way, with the whole model and documentation in place to support it. Because it's like when you are developing a franchise model for a business, it's like building a jigsaw, but you don't know what the picture's going to look like till you actually finish it. And sometimes you've got to change bits of the jigsaw to make it fit. And when it does fit, it's a really great feeling. But you've got to make sure that all of that work is done in advance to ensure that you really know what the offer is. And then you only take the right people on board, and you do use that recruitment process to ensure that they're right for you and you're right for them as well.
Fantastic. Well, Julie, that's hopefully been inspiring to our audience and viewers and listeners who are either in the franchising sector and saying that, hey, we're doing things right. Some ideas for people who may be looking to develop their franchise model, or those who are just inspired to think of it as an option as a franchisee for them. So really appreciate your time today. Your contact details will be on the end of the podcast so that anyone wants to contact you directly, and we'll go from there. You got a question for me? Well,
the only thing I'd like to say in addition to that is obviously thanks for the time. The other part of the success is that make sure that when you bring them in, you give them good training and good support. And certainly, again, in terms of the work that we do with our clients, as well as doing development work, we've got a very good support to offer in terms of franchisee training, franchisor training, and ongoing support, which obviously we are working in close conjunction with you, Nick, to help us do that.
Well, thanks for the plug. I appreciate that. That wasn't deliberate, but thank you very much for that.
So as well as working with new companies, we also work with established existing franchisors as well.
Excellent. I'm enjoying the experience of working in the sector. It's very different, very interesting. I'm really enjoying working with you on that basis with all your experience. So as I say, it's been a pleasure. Your contact details will be available for anybody on the end of the podcast as well. So Julie Waits, Managing Director of the Franchise Company, thanks for being on the Impact Sessions.
Thank you.